A very good evening to all my dear students. On behalf of ICAI, I once again welcome you for a new start, a new chapter, that is chapter number 4, Share Capital and Debentures. So very warm welcome to all of you to the class. So we will be first starting with a new topic, and then as discussed and as promised with you, we will be discussing few important questions related to irregular allotment of securities. Let me just open the admin query also, and let me see how many of you have joined over there. So I hope, students, you have revised the previous class. What we did in the previous class, we completed the chapter number 3, that is prospectus. All the question answers were also done. Related to irregular allotment, I told you that since you have few doubts, so we will be revising it in today's class as well. Good evening, Rajveer, Asta Sethi, Soumya, Harsh, all of you, Priya Mishra. Ajit sir, students at the portal have written that they are not able to join through the Zoom app. I hope they are having the correct link. Yes, Manish sir. So students have written that they are not able to join the Zoom session. Yeah. All right, we're just getting it checked. Don't worry. Good evening, Asta Sethi, Almaz, Bhumika. And this is also a good platform, children. You can send your queries here also. Asta Sethi has sent it out, ma'am, in the minimum subscription, 80% or 80% of issued. So Asta Sethi, we discussed that minimum subscription should be 90%. If nothing has been given, then as per the articles. If articles has given 80%, then we'll go for articles. Otherwise, if nothing is given, 90% is something that has to be taken as the minimum subscription. Yes, Harsh, you will get all the notes, not to worry. All right. Okay, Priyanka Mishra, Priya Mishra, we will just get it checked why you're not able to join. So don't worry. Priyanshi, good evening. All of you students, Bhumika, Mr. Almas, all the students, those who have joined, a very warm welcome to the class. So children, today we will be starting the chapter Share Capital and Debentures, which is from section number 43 to section 72 of Companies Act. And as I told you, since Companies Act 2013, we also have respective rules related to every chapter. So your module is designed so beautifully that you don't even need to open the BEAR Act, because most of the provisions directly taken from the BEAR Act have been given very nicely over here. You refer to the sections, and vis-a-vis the specific rules have been given so that you can understand the procedure which is laid down in respective rules. Priyanshi Tak is saying it's showing the password length is having some problem. Same problem Priyanka Pandey has mentioned. Don't worry, students. We're getting checked it at the back end. Technical team is checking it. You will be able to join the Zoom session also. Otherwise, you can keep sending your queries here. Not to worry. Yes, Asta Sethi, in that respective question, it is specifically given 80% of the minimum subscription as per the Articles of Association. So there, in that case, we will consider that 80%. So since 80% was not subscribed, that's why it was held to be the irregular allotment of securities. All right. All right. So we all know that company needs finance. Now we have been studying in the previous chapter about raising your share capital by issuing prospectus. So we have very well understood the different types of prospectus. It was a shelf prospectus. If there was a multiple issue of securities, it was red herring prospectus 3 days prior to the final issue. It is given to the ROC and it is bought in the market whenever the company is coming up with an IPO. Remember, we have discussed in detail about all these types of prospectus, and other two were abridged, which is a summary, and deemed prospectus when the company is taking help of issuing house. The document that issuing house uses for offering the securities to the public was deemed to be the prospectus. So now we have issued the prospectus. We have come open to the public. Now what is going to happen? Public is going to buy our shares. They will give us the money. This also was done, section 39, 40. We understood how allotment of securities was happened. Money was taken from the public and we allotted them securities. So what were the securities? Can you see the word securities written over here again? It says, because company need finance for running the company, therefore it issues shares and debentures which are referred as securities under Companies Act. So I hope you all remember the definition of securities. So here is a short test. Question number 1 for your revision. Is collective investment schemes part of securities? Yes, ma'am, or no, ma'am? Rajbir Ray, in the prospectus, if you're issuing, what kind of dividend you're asking will be given. Sources of income, each and every prospectus is a very huge document. So all the details of the companies has to be given. So if you'll refer to some of the sample prospectus, like we have shown in the class, RHP of Mahindra and other companies, if you'll refer, you will come to know what all details they have mentioned, but the basic details which helps the investor in taking a decision, that is must. So if you're telling them that this we are paying dividend, but actually the source is not mentioned and it is not profits, but you're having losses in the previous year, that means you're giving a fake position of the company. You're trying to create a fake image. So all the nitty-gritties which are important for investors' decision have to be mentioned. All right. Not to worry, Dhanush, then you can chat with us over here. The live is on, so you can see us in the live session. So don't worry, even if you're not in the Zoom, you can directly write to us from there also. Yes, Harsh, it's exactly like that. Bhumika is saying not included, which are the base of the law. No, Bhumika, that was life insurance. That is not included. But for collective investment scheme, yes, it is included in the securities. Yes, Priya Mishra, definitely you have to learn the definition of securities. That is important. They can ask you the direct definition, but they can ask you the MCQs also, that like we have done. So Unit Trust of India securities, collective investment scheme securities, if LIC is part of securities or not. So we did discuss that the ULIPs plans that we issued, they are not securities because they are you selling life insurance also. So those kind of questions can come, but my child, you will be able to answer those questions only if you have learned the definition. So learning of definition becomes very, very important. Yes, Pragya Agarwal, welcome to the class. And yes, definitely you can start learning from this chapter also, not to worry. All right. So here was a quick brushing up of our skills of previous chapter and correlating it to chapter number 4, how the shares and debentures story started. It started with chapter 3. And now we're going to understand what are these shares? What is the share capital? What are debentures? First of all, let me just make your mind very relaxed that it's a very interesting chapter. Though it's very technical, but one thing, my friend, shares and debentures are the words which you, my dear students, have been listening starting from class 11th and 12th. So it is not something very new which is coming up. Prospectus was a new word, but shares and debentures, we are very, very familiar with these words. You all know that shares tells the ownership interest in the company. If I have taken 5 shares in Reliance, that means I am holding 5% of the paid up share capital cap. If I'm holding 5% of the shares of Reliance, that means I'm 5% ownership rights I'm having. So whatever shares I'm holding in any company, it gives me the respective right in proportion to the share capital that I'm having. Along with the entrepreneur risk and reward. What is the meaning of this line? On shares, you will get dividend, you're earning income, but you also are prone to risks and rewards. If you're invested in a company which is going down, the price is going down, dividends will be lower, you will be at a loss. If the company performs well in the stock market, the dividends are high, rewards are high, you have to take such kind of risk. Why it is called entrepreneur risk means depending upon the capacity of the business, the way the company is running its business. What are debentures? Can anyone tell me what are debentures? You should answer it, children. Khushi Yadav, all these notes will be there on the admin portal, so you can refer from there as well. Mohammed, Soumya, Shubhanshi, Deepika, all of they have written that we are not able to join the session directly. Manish sir, can we help the students because they are again and again writing? Is there some technical problem? So will they be able to join from here or they can continue from the admin query? I can tell them. Okay. All right. All right, students, the team is working at the back end to rectify the errors. Meanwhile, we can be connected on the admin query. Not to worry. Why are you worrying about this? I can see your questions and answers over here. All right. And beautiful answer given by Priyanshi, Priyanka, Rajveer, Priya Mishra, Rihana, Deepika. Excellent. Debentures are a kind of loans. They are the borrowing. They shows the lender's interest in the company with limited risk. So if I am lending a borrowing to the company, debentures is a kind of a borrowing. But related to debentures, we have respective sections. I have showed you all the sections that we will be doing in these chapters. So this chapter revolves around section number 43 to section 72. So your entire section 43 up till section 71 relates to share capital, and exclusively section 72 deals with debentures, how debenture trustee is appointed, a person who will be taking care of the securities which the company has given against the borrowings of the company. Entire things of debentures we will be doing when we will cover section 70. But we will be starting from section 43 and go on till section 71, understanding all the details about the shares and share capital. Good, Bhumika, Kirubhasi, Harsh, Sunil, Priyanshi, all of you have given wonderful answers. That's absolutely correct. It's a kind of a debt. It gives the right to the owners and they get the respective interest from the debentures. That's absolutely good. Now, what is the definition of shares? It includes stock also. So if you'll open your study material, when you'll see your module, the first paragraph that is written over there is stock description. Just immediately after the word shares, they have come up with the new word stock. Again, we have heard about this word stocks, bonds, debentures as a part of security also. But since here it says shares include stock. So what is the meaning of the word stock? So if A is having the shares in a company, let's assume there are 3 shareholders, A, B, and C. 10,000 shares in the company, which are at the rate rupees 10 each. How much will be the share capital that he's holding? 1 lakh. So now when these 10,000 shares are fully paid up, say for example, if he has only paid rupees 8 on these shares, the share price is rupees 10, but this Mr. A has only paid rupees 8. Can we say that it is a fully paid up share? Yes, ma'am, or no, ma'am? No, ma'am, then it is not a fully paid up share. But if he has paid full rupees 10, B has 5,000 shares, they are also fully paid. C has 6,000 shares, they're also fully paid. Then these fully paid up shares will become a stock. Until and unless they're not fully paid, they cannot be converted into stock. So if company undertakes aggregate fully paid up shares of various members and merge those shares into one fund, it is known as a stock. So stock is a bundle of fully paid up shares. I took 10,000 shares in the company and they're not fully paid up, they will not be stock. But once I have taken up the shares in a company and full amount has been paid, then they become fully paid shares. And once it is a bundle of fully paid shares, they are referred to as a stock. So company limited having a share capital can convert its fully paid up shares into stock and reconvert the stock into fully paid up shares. So we can either sell the stock of the shares fully, can also be sold, but only if there are fully paid up shares. Is that clear? Very good. Then it is 80,000. Excellent. Then it will not be considered as stock. Yes, it is a combined group of shares, Harsh. It is absolutely correct. Anubhav, good answers. All of you have given. Deepika, Priyanka, Soumya, good. Yes, Anubhav, if you have purchased one share with the price of ₹10 and it is fully paid up, then it is a stock, because all the shares which are fully paid up will be considered as stock. So you buy one share, you buy 5 shares. If the amount, the face value, that is the amount denomination you have fully paid up, then it becomes a stock. Everyone is clear about what is a stock and what is a share? So share is a small unit and stock is the bigger unit of all the shares that you have purchased and you have fully paid them up. It becomes a stock. I hope, Anubhav, Malik, you're clear on your answer. Now, what are the kinds of share capital? This you are going to tell me, because again, this is something which is very familiar to you. If you remember in CA Foundation also, you have studied the last chapter, Companies Act. When you open up the first heading, it talks about is kinds of share capital. After doing types of companies, you start with what is a share and we have kinds of share capital. So it is a replicate and detailed version of what you have touched based in your CA Foundation. So how many types of share capital you have? What are you asking, Jayendra? Thank you, Priyanka Pandey, for writing. It's crystal clear. So that's great. Jayendra is saying, in the viewpoint of company or shareholder, from the viewpoint of a shareholder, it is known as a stock. So tomorrow, if you want to sell the stock of the shares, that means all your fully paid up shares are combined into a stock. All right, Jayendra? So kinds of share capital, there are two important share capital. One is equity share capital, another is preference share capital. And what do we know about preference share capital? The word preference in itself tells us that these are the shares which carry a preferential right. इनको एक हक दिया गया है that you have the preference when the dividend of the company will be paid. Say, for example, there are A equity shares and there are B preference shares. There are C preference shares and there are D equity shares. Now, ABC Limited goes into liquidation and they are repaying the capital. Who will be called first for the repayment of capital? There is 1 crore of the capital and the repayment has to be done. So first preference will be given to B and C. Then A and D will be invited for the repayment of capital. This is one. Second is, whenever the company is paying dividend, these preference shares have fixed rate of dividend also. 7% preference shares, 6% preference shares. So the dividend is fixed. So whenever the company is going to pay, they first pay the dividend to B, then pay the dividend to C, and after that, the dividend to A and D will be given with respect to their shares in the company. Is that clear, all of you? So preference share capital is very, very important. In the further chapter, we will be discussing about the issue of preference share capital, जिसकी आप accounts में journal entries करते हो, उसकी हमने backup theory पढ़नी. Somebody is saying, मैम हिंदी में भी बोलो. बेटा आपको कुछ भी ना समझ आए, आप मुझसे पूछ लीजिए, मैं आपको हिंदी में बता दूंगी. But whole lecture cannot be held in Hindi because we have friends from South also. They will not understand if entire lecture is conducted in Hindi. But if you don't understand anything, अगर आपको नहीं कुछ समझ आ रहा, तो आप मुझसे पूछ सकते हैं, मैं आपको हिंदी में भी explain करूँ. All right? So preference share capital has two preference. One, when the dividend is to be paid, these preference shareholders will be first given preference. They will be given the dividend. And whenever the capital is being repaid at the winding up, they will be called first and they will be repaid the capital. And what is the second category? Equity share capital. So I was telling you, preference share capital, we'll be studying about the issue of preference share capital also, redemption of preference share capital. In detail, we'll be doing about all those theories about preference share capital. As of now, we're just referring the content which is given as per the respective sections. So right now, we are in section 43. After 2-3 slides of presentation, I will take you directly in the study material also, so that each and every line of the module is also crystal clear to my students. But as of now, just pay attention what we are discussing. What is the second category of share capital? That is equity share capital. Now, equity share capital, you all know, has two types. Remember, you have heard about this thing also in your foundation, that there are two types of equity shares. One is voting rights, uniform voting rights, which are also known as vanilla equity shares. You like vanilla ice cream? So next time you remember vanilla ice cream, you will say 1 share, 1 voting right. 10 shares, 10 voting rights. So they are uniform. They are plain vanilla equity shares with voting rights. There is no difference. Uniform का मतलब क्या होता है? Same. So यहाँ पे there is no difference. They have uniformity. A has taken up 10,000 shares in the company. So he will get rights equivalent to 10,000 shares. B has taken up 10 shares in the company. He will get the rights with respect to 10 shares voting rights. I have taken up 1 share in Reliance. I will get 1. Is that clear? Plain vanilla equity shares. But what are these differential voting rights? Till now, we have learned only Tata Motors have come up with DVRs, but now the companies are expanding and they are issuing DVRs to their shareholders. So what are DVRs? What is differential voting rights? So one is equity share capital, which has uniform voting rights, 1 share, 1, 10 shares, 10 votes. But under differential equity shares, they are different with respect to either the dividend or the voting right. So whenever, say for example, there is a shareholder who has taken up 500 shares in a company and he is Mr. A. But when Mr. B joins, he also takes 500 shares in a company. Then some dilution of his ownership will happen, right? Say for example, if the share capital is 1 lakh rupees. So here he was only having 500 shares out of that 1 lakh. Now somebody else is also having 500 shares out of that 1 lakh. So ownership is getting, variation is happening, but whatever is his percentage of share, he will get the voting rights with respect. But in case of DVRs, which is the short form of differential voting rights, if there is Mr. A who is holding 500 shares, for equity shares, for uniform voting rights, we were giving 500 voting rights. Here he is given 10 voting rights. We said, sorry, we can't give you so many voting rights. We'll give you less voting rights. Now this Mr. A is little disheartened that I'm having so many shares in your company and you're just giving me 10 will be very less. Let's give 100. He's just having 100 voting rights. So we try to give him additional benefit, that is additional dividend will be given to him. Say for example, the upper class shareholders were getting dividend at the rate of 4%. Here, they will be getting a dividend at the rate of 8%, double of what they are getting. So DVRs are the shares which are different with respect to the voting rights or with respect to the dividends, or in any other case, they are not having the uniform voting rights. For Tata Motors, 10 shares were given 1 voting right and additional dividend was given to them. If you remember that respective example when the DVRs were issued by a company. So we need to understand what is the procedure of issuing the DVRs. Equity shares with differential rights, there are certain conditions which are to be satisfied whenever the company wants to come with the DRs, that is differential voting rights shares. First of all, articles of the company should be giving its authorization. I cannot do anything if my articles don't allow me to issue the DVRs for the shareholders. So if I am ABC Limited and nothing is written in my articles that you can issue DVRs, can I issue DVRs in that case? Who will authorize me? My memorandum or articles should be giving me the right. Then only I can issue the DVRs. Everybody is clear about this? All right. Such issue is authorized by an ordinary resolution at a general meeting, which the company is required to pass. Now, what is the meaning of the word ordinary resolution? We have had a small discussion related to ordinary resolution, special resolution in the previous lecture also. Do you remember what is ordinary resolution? So there are two types of resolutions which are passed in the meeting. One is OR, that is ordinary resolution, and one is SR, which is special resolution, where majority of the shareholders say yes to any kind of resolution. You have not given me the correct answer for the previous one, children. You have written yes, ma'am. So I asked you if articles I have not written that I will give you, you can issue DVRs. Then can you issue DVRs? I have not received the answer for this one. Yes, no, ma'am, you cannot. It's okay, Sunil Kumar. There is some problem in the Zoom class. You can directly talk to me through this admin query. Okay. Absolutely correct. Your articles of association must authorize, then only you can issue. And Anubhav and those who have written 50% simple majority, Miss P, absolutely correct. 50% of the majority of the shareholders, if they have agreed, then it is said to be an ordinary resolution. For special resolution, 3 times of the shareholders, that is 75%, which it comes to be, should be giving their yes for any resolution, then only it is said. So DVR seemed to be something very important, crucial. It looks like SR should have been passed, but no, you have to remember OR needs to be passed for authorizing the DVRs to be issued. Now, there is a second line which says a listed public company is required to pass this resolution through postal ballot. Now, children, let me tell you one thing. There is chapter number 7, which is known as Management and Administration of Company. That chapter exclusively talk about all these terminologies which we are referring over. So at times I feel surprised that I'm reading out this text to you, but actually we'll be learning the meaning of OR, SR, voting, postal ballots, electronic votes, voting by poll. All these words are the actual terminology of MGT, that is Management and Administration. So there we will learn what is the meaning of postal ballot. But since here the word is written, so I think you should at least know about what it is talking about. So when it is a listed company, they have to pass their resolution through postal ballot. What is the meaning of postal? Means by post. So ballot papers are sent to all the shareholders by post. They send the ballot papers that this is the decision that the company is going to take about. We are thinking of issuing DVRs to our shareholders. They will send this by post to all the shareholders. Shareholders will read this. They will decide whether they want to say yes or no for this ballot paper. So they will give their answer and then they send it back to the company. The company will open, they will see the consensus. Whatsoever majority says, decision will be taken as per that. So that is the meaning of postal ballot. But in chapter number 7, we will discuss detailed process, how it happens. All right. Yes, Mr. Harsh Shrestha, you can say that in DVRs, the rate of dividend or voting rights are not uniform. They may vary in different percentages. That is absolutely correct. All right, Miss Soumya, thank you so much. I'm glad you're understanding everything. Shelja, Rajput, Bhumika, Rajveer, Deep Aman, good. Great answers all of you have said. Priyanka Pandey, Miss P, all right. Clear ho gaya? Now the voting power in respect of shares with DVRs shall not exceed 74% of total voting power. Now in your entire chapters that you will be reading, this is the only limit of 74% that is coming up here. All the other places, there might be 75% of the SR or other things. So एक ही जगह पे 74% वाली फिगर आ रही है, आपने याद रख लेनी है वो DVRs में, और कहीं नहीं है ये वाली परसेंटेज वाली फिगर. दिस इज द टिप फॉर लर्निंग. सो व्हाट इज इट सेइंग कि DVRs के जो वोटिंग राइट्स होंगे ना, वो किसी भी टाइम टोटल वोटिंग पावर के 74% से ज्यादा नहीं हो सकते. So while issuing the DVRs, you have to make sure that you are not giving the total voting rights shall not exceed more than 74% of the total. So if the total voting power of the company is 100, so DVRs will be restricted to 74. They cannot be beyond. So these 3 points were related to compliance. If you're making notes along with me, you can write down. We are doing the conditions related to DVRs. Mr. Sharath, you can send your queries here, not to worry about how to join the class. We can directly do the clarity here also, okay? First 3 points are related to compliance. AO authorization, OR has to be passed, listed company at the postal ballot, and the total voting power will not exceed 74% of the total power. Now the next 3 points are related to defaults. That the company should not have done default. Now you are thinking of issuing DVRs. You are planning to give more dividend to certain class of equity shareholders. I hope you are a good company. You are not making any defaults. That is what we have to check. So the next 3 points relates to defaults. Company should not have, I mean to say no defaults. Don't learn that they should be defaults. No defaults. गलती नहीं होनी चाहिए. Default का मतलब होता है गलती, no defaults. Company should not have defaulted in filing the financial statements and the annual returns for 3 immediately preceding financial year. So I'm going to ask you later in the MCQs, for how many financial years company should not have defaulted? For 3 immediately preceding financial year, company should have been regularly filing the financial statements and the annual returns. So if company has been regularly filing for 3 years, but somewhere back 6 years ago, it has not filed, will it put any hindrance? Yes or no? All right. Thank you, Miss Priyanshi. I'm glad you're understanding it in a nice way. Good. Yes, Bhumika, it cannot exceed 74%. Excellent, Deepika, Priyanka. It should be 3 immediately preceding years. So, Miss P and Bhumika, you're absolutely correct. No is the correct answer. आपने डिफॉल्ट 6-7 years ago करा था, उससे फर्क नहीं पड़ता. हमें क्या देखना है कि 3 immediately. So, if I am in the year 25-26, so 24-25, 23-24, and 22-23 should not have been defaulted. Prior to this, if you are making any default, then it is not mentioning about. All right. Company has no subsisting default. Subsisting means existing default. ऐसा कोई गलती तो नहीं है जो अभी तक चलती जा रही. Subsisting means existing default. In what things? In payment of dividend. I hope the company is paying dividend to its equity shareholders. Now just imagine you are ABC Limited. You are thinking of coming up with GVRs for respective class of shareholders, but actually you are not giving dividend to your existing shareholders. Law is not going to allow you to issue DVRs. First, pay the dividend to already equity shareholders हैं. क्या आप उनका dividend देते हो या नहीं देते? अगर आपने default करा है, तो आप equity shares नहीं issue कर सकते. If you have defaulted, then you cannot issue the equity shares. Second point, if you have defaulted in repayment of maturity deposits with interest. What is the meaning of this line? Company has taken certain deposit monies. Again, chapter number 5, when we do, we will understand about acceptance of deposits. What are deposits? So company at times take borrowing loans, at times it takes the deposits also. So on those deposits, the company has to pay interest. So whether the company is repaying these deposits and interest properly or not. Is the company redeeming the preference shares? I hope there is no default in redemption. Here, preference shareholders are sitting and crying that the company has not given us money. And on the other side, you're planning to issue DVRs. Law will not allow. Here, debentures are crying that you are not redeeming my debentures with interest. There is a default. The company is a defaulter. Then you will not be allowed to issue the DVRs. Is that correct? So what are the 4 defaults that should not have been made? Company has not defaulted in payment of dividend. Company has not defaulted in the repayment of maturity with interest. Company has not defaulted in redeeming the preference shares. And company has not defaulted in the redemption of debentures. And I'm glad to see some of the students are now being able to join on the Zoom. So good to have you back on the class. Otherwise, also, if you're there on the portal, then also it's fine. All right. Clear हो गया? The first 2 points were related to compliance. First 3 points were related to compliance. Let's have a quick recap because this is little technical topic, so we'll keep revising side by side. What were the 3 compliance? AO, AOA, Articles of Association, OR, Ordinary Resolution. Then it's not more than 74% of the total voting. Additional point, listed company hai to postal ballot. Clear? What were the 3 defaulting points? Number 1 defaulting point, company has been filing the financial statements and annual returns for the last 3 financial years. It has not defaulted. Other defaults, company has not defaulted in 4 things: dividend, preference shares redemption, debentures redemption, maturity deposits ka redemption. Company should not have defaulted in this. Next default, I told you, there are 3 defaults. Number 1 default is here, 4th point. Number 2nd default, 5th point. Number 6th is the 3rd default. Company has not defaulted in payment of dividend to preference shares. There we were talking about equity shares. Here we are talking about the preference share dividend. So company is paying good preference shares dividend also. Repayment of term loan within trust. Now company has taken certain loan from public financial institutions or scheduled bank or SFIs, that is state level financial institutions. Now you tell me honestly, if you are a company ABC Limited and you are very happy to announce TVRs to its shareholders because you want to give them lesser voting rights but additional dividend. But at the same time, there is a public financial institution from whom you have taken 1 crore loan. You have not repaid that loan, neither you are repaying its interest. Will you be allowed to issue DVRs? Yes, ma'am, or no? इस तरह से क्वेश्चंस आएंगे आपको. MCQs will be like this. He will not ask you, tell me which are the defaults not made. तो बहुत easy हो जाएगा ना. Your CA intermediate students, consultants, future chartered accountants, counselors, advisors. So you have to do a good application of mind. So there is a company not repaying the loans, not repaying the deposits, or it has not redeemed. The dates will be given. There was a maturity date of deposit 31st October 2024. Company has defaulted. It has not repaid the deposits. But at the same time, it is planning to issue DVRs. Can the company issue DVRs? The answer will be excellent answers given by all of you. No, ma'am. We cannot. Strictly no. My God. Soumya says, ma'am, it is strictly not possible. No, they can't. Sunil, Gunashri, good to have you back in the chat box. I can see your messages now. And all those here also, Deepika, Priyanka, very good. Yes, Bhumika, no is the correct answer. Clear हो गया. तो repayment of term loan अगर करा है, preference shares का dividend नहीं दिया, all these kind of defaults you can also do. Statutory payment of employees. Statutory payments क्या होती है? Provident funds, ESIs, salaries. Employees का पैसा नहीं दे रहे हो and DVRs issue कर रहे हो. Not allowed. Cannot do. So this is also not allowed. Default in crediting the amount to IEPF fund. I told you, Investor Education Protection Fund. It is a very important fund when we do chapter number 8 related to dividend. There you will understand about Investor Education and Protection Fund. So the company should not have defaulted in repaying the money to this respective fund. All right. So what are the 4 defaults in point number 6? Company has not defaulted in the paying the dividend. Company has not defaulted in repaying the term loan interest. Company has not defaulted in the statutory payment of employees. And while crediting the amounts to IEPF funds, no default has been made. Company may issue, now 6th point is very exclusive point. Company may issue equity shares with DVRs on the expiry of 5 years from the end of financial year in which the default was made. Now, only with respect to these 4 statutory defaults with employees, repayment of term loan interest, preference shares का dividend and investor education fund, अगर इन 4 categories में default है, Then a time period is given by law, which says they will get a time period of 5 years, that they are not allowed to issue DVRs only for the 5 years from the end of the financial year in which the default was made good. What is the meaning of default was made good? Let's try to understand with the help of an example. I am a company XYZ Limited, and I defaulted in paying dividend to preference shareholders in year 2015. And then I paid, so I cannot issue DVRs, right? I have defaulted in paying the dividend to preference shareholders in year 2015, so I'm not allowed to issue the DVRs. Even I'm not allowed to issue next year or prior year until I pay their dividend. I paid their dividend in year 2018. Now, when can this company be allowed to issue DVRs? If I have paid their dividend in year 2018, then after how many years I will be allowed to issue the DVRs? Very good, Soumya. Excellent. Jindra is saying in 2018. No. Dhanush, good. Priya, good. So 5 years should have passed from the end of financial year. Financial year कौन सा end हुआ जब मैंने dividend default ही कर दिया? इसका meaning क्या है? I have made good the default. Means whatever default I made, now I have rectified my mistake. I was at error. 2015, I defaulted. Till the time I have not repaid, I was not allowed to issue DVRs. But not in the year I have made default good. 5 years should have passed. It says 5 years should have passed from the end of 2018. So year 2018 plus 5 years, and all those who have written 2023, I can issue DVRs, is absolutely correct. So in 2023, yes, you can issue DVRs, not before that, because जब आपने गलती को सुधारा है, उससे 5 साल बाद आप DVRs issue कर सकते हो in Hindi. Once you have rectified your mistake, after that, from 5 years from the end of that year, you can issue DVRs. So this is the incentive given to you if you have defaulted in point number 6 in this category. For the other ones, you are not allowed. You will not issue DVRs. If you have defaulted in equity shareholders dividend, repayment of maturity deposit, redemption of preference and shares and debentures, then you're not allowed. If you have not filed the financial statements and annual return for last 3 financial years, you're not allowed. But only in the 6th category, 4 points, if you have made good the default, 5 years after you have made good the default, you will be allowed to issue the DVRs. And the 7th point seems very huge, but it's very, very simple. Company has not been penalized. Penalized का मतलब क्या होता है? Penalty नहीं लगी होनी चाहिए. Company के ऊपर penalty नहीं लगी होनी चाहिए. किससे नहीं लगी होनी चाहिए? By court or tribunal for the last 3 financial years. So the company should not have been bound to pay liability penalty because of the court's order or tribunal's order. Under what kind of offense? Under the RBI Act offense, because of SEBI non-compliance, because of SACARA non-compliance, or because of FEMA or any other special act. So if you have been penalized by the court or tribunal order for the last 3 years under any of these respective acts, then you are not allowed to be issued DVRs. All right, clear? Let's see the next point. Now, whenever the equity shares with differential voting rights are issued, we need to pass OR, I told you. But there are 2 different kinds of business that the company does. Whenever there is a general meeting, again, I told you this is part of your MGT management. But since we are studying about the words, so I'm giving you very basic touch base meanings. Ordinary business. One is ordinary business of the company and another is special business. Another is special business. There are 4 types of businesses which are considered as the ordinary business. And generally for the ordinary business, we pass OR, but there can be SR also for any ordinary. So there are 2 types of business that the company does, ordinary business and special business whenever it has to pass a general meeting. Now, what is this ordinary business? Act has specifically. Okay, Priyanshi, we will refer to that point from the study material once I will open that, okay? In ordinary business, only 4 types of ordinary business has been recognized for the payment of dividend, for your records of books of accounts, entries, approval, appointment of directors and appointment of auditors. This is a respective category of list which is given under the Act, which is considered to be the ordinary business. Other than that, any kind of business transactions that you're doing in the general meeting is considered to be a special business. Like say, for example, you are planning to open up a new manufacturing unit for your company. So that is not part of ordinary business because ordinary business with appointment and removal of directors, auditors, payment of dividend and acceptance approval of the books of accounts. These are the 4 specific kind of activities which are included as a part of ordinary business, which we will discuss in detail in chapter number 7. But did I ever mention that for opening of any business that you're doing or any closure of business unit, all these big decisions, all these different kind of things, different from the above 4 items, you need to do a special business transaction. And whenever this special business is being transacted by the company, an explanatory statement needs to be given along with the notice which goes for the meeting. When a company is a special business, you can just write down this line. This much is only sufficient. Whenever the company is doing any special business, in bracket, write down other than the 4 business mentioned in the ordinary business. In bracket means any other business other than the 4 types of business mentioned in the ordinary business. Bracket close. In that case, company needs to send an explanatory statement to its members along with the notice of general meeting. So always whenever the company calls a general meeting, company has to send a notice. कंपनी को शेयर होल्डर्स को नोटिस भेजना पड़ता है, तो उस नोटिस के साथ क्या जाती है, एक्सप्लेनेटरी स्टेटमेंट जाती है whenever we are doing a special kind of business. Clear? I hope you have got a random idea about explanatory statement. Now, issuing of DVRs, is it an ordinary business or it is a special business? You tell me. From the hint that I have given you, what does it seem? Is it an ordinary business or it is a special business? Rajbir Ray, Anubhav. Anubhav, it is a special business because ordinary mein sirf I told you 4 types of. Very good, Bhumika, Priya, all of you. So everyone is clear. DVR is a special business. Since DVR is a special business, that is why we are sending an explanatory statement along with the notice. So this is for your concept clarity. You just don't need to make everything a ratta. You have to understand what is the logic behind it. Okay, now you will never forget why there is an explanatory statement. Good, Dhanush and Priya Mishra, Bhumika, everyone. So explanatory statement का मतलब क्या होता है? Detail में explanation देना. आप पूरा detail बताओगे about the size of issue, what are the DVRs that we are issuing, how many shareholders will be getting, what about the postal ballot details, the resolution. Remember, we used to pass a resolution by postal ballot. So whenever you're sending the notice of general meeting, you will give all the details about the size of issue, how many DVRs you're issuing, How will they be different? What will be the dividend? What will be the dividend to be paid? What will be the voting rights? All these details have to be given in case of the deal. Second is company. Well, these are the points which are given under rules. When we open the study material, I'll show you. These are the rules of the Companies Act. Company will not convert existing share capital with voting rights carrying differential voting rights and vice versa. If there is an A-class equity shares, they cannot be converted into DVRs. Neither the DVRs can be converted into equity shares. So you always have to issue the fresh DVRs. You cannot convert it. Details have to be disclosed in the board of directors report also. This is just an additional line to learn in the board of directors, because now you are doing such a big work. You are doing a special business transaction. So you need to disclose such details in your board of directors report. What is board of directors report? CA final syllabus. There we study in detail about directors. Okay. Holders of the equity shares with differential rights shall enjoy all the bonus shares and rights shares which the holders of equity shares are subject to, with which the shares are issued. So, you know about bonus shares. I told you, you get bonus shares, you are given to the existing shareholders, rights shares are given to the existing shareholders. So, the question is, will the DVRs will also get? So, yes, the rights of the DVRs are pari passu with the equity shareholders. Pari passu means at par. We all are equal. ऐसा नहीं है कि मैं इक्विटी शेयर होल्ड यूनिफॉर्म वोटिंग राइट्स वनीला वोटिंग राइट्स इज डिफरेंट and DVRs will be treated different. They will be only treated different with respect to two things, that is voting rights and payment of dividend. Other than that, right shares, bonus shares, they will also be treated equally. That means DVR shareholders will also be given the bonus shares and rights. And again, register of members is a register which is maintained under section 88. All the details of the shareholders in this register of members have to be entered. So when we do chapter number 7, we understand about section 88. वहाँ पे दिया हुआ है किस तरह के registers बनते हैं, registers of shareholders, register of debenture holders. होता क्या है ये registers? What are these registers? So you are the shareholders of my company. Don't you think I need to record the details? How will I remember so many names? So Reliance has so many shareholders. You yourself take up one share of a company. So anyone can take up a share in a company, right? In the stock market. So the company has a register of members as per the provisions of section 88. That register has to be maintained. DVR के लिए क्या point है? That those who have been issued DVRs, their names will also be entered in the register. The shareholders to whom the DVRs have been issued, that is differential voting rights, their names shall also be entered in the register of members. Clear? So we are done with the first detailed vast topic, that is section number 43, which talks about, first we have done what is share and stock. They are different. Stock is fully paid up shares, and the shares which have been fully paid up, they are converted into one stock. So stock includes shares only. So one and the same thing, only fully paid up is the word that we have to learn. A bundle of fully paid up shares is a stock. Second, we learned the types of share capitals, which you have been knowing about preference shareholders. They are given the preference for the repayment of capital at the time of winding up and for the payment of dividend. Equity shares, there are two types of equity share capital. One is uniform vanilla voting rights and one is differential voting rights. Uniform voting rights, 10 shares, one voting right, whatever you, it's up to the company. So we have done the detailed procedure, how the DVRs are issued. Now, before proceeding further, see what my plan is. I want you to learn very two important topics with me today in the class itself. One is DVRs and another huge topic is sweat equity shares. In between, we have some tits and bits which we will be discussing in detail. So DVR is a very important topic which we have done. So here I'm going to give you a break. In the break, I request each one of you just go through the procedure, absorb the information that we have discussed, and then we will proceed further. All right, so let's take a small break. I understand you need to read it, what we have done. students? All right, welcome back. Thank you so much, Priyanshi. She has written, ma'am, I have read from the book, and after your explanation, it has become really easy. So I'm glad to read this. That's why I try my best to make it easy for you. But still, let's have a quick recap of the topic from the study material also, so that when you read it after the class, it becomes very clear to you. All right. So we have understood all these points. We should never leave any illustrations which are given in the module. So let's read this illustration. This is a simple paragraph. It tells you that shares is not a sum of money, it is an interest. So I told you that whatever percentage of shares you're holding, that is the interest that you're having in the company. Say, for example, Sun Bakers Limited has authorized share capital of 50 lakhs and the value of share is rupees 10. In this case, company has 5 lakh shares of rupees 10. When these shares, either in part or whole, are allotted to various persons on the date of allotment, please underline this line. On the date of allotment, you become the shareholder of the company. So you get the letter of allotment. Remember, where have we read about the letter of allotment? What was the section where we have studied about the allotment of securities? Let's see who tells me first. And the students on the portal also, very nice. Everyone, excellent. Section 39, allotment of securities. So from that very day, children, the person becomes the shareholder of the company. Yes, Harsh, we are going doing the same thing. We'll be going through the entire chapter from the module as well. Okay. Anubhav is saying, ma'am, point number 2, doubt. So, child, which section, what point number 2, doubt? Please clarify so that I can solve your doubt. Clear example, this one is clear to everyone. The company limited by Shah, just underline this line that from the date of allotment, you become the shareholder. Stocks is clear to everyone. Difference is clear. Kinds of share capital. Any important point which was to be made here? Yes. Illustration 2. Endswift Pharma Labs Limited and Panacea Biotechs Limited issued preference shares, and it said that the preferential dividend may be fixed amount of 5 lakh in 1 year was payable to the preference shareholders before anything is paid to the ordinary shareholders. So the company provides the amount payable dividend may be calculated at the fixed rate of 8% of the nominal value of the share. So we all know this thing since childhood. You have been reading that preference shareholders will be given the first preference. So that is clear. Page 4.6.B, preference shares. Okay, Miss P. Yes, Priyanshi, absolutely correct. The 4 ordinary business, but you don't need to learn as of now because that you will be learning when you're doing MGT. Payment of declared dividend, Soumya, the dividend which has been declared by the company. So the company has a general meeting, board resolution, all these things are passed and the dividend is decided by the company. What dividend they are going to give? Page 4.6, point B. Okay, Ms. P is asking about the repayment of the capital. Point number B, this simply tells you that when the company is going into winding up, so the first payment will be made to the preference shareholders and any balance that is left will be given to the equity shareholders. It says repayment of capital preference exists only for the amount paid up or deemed to have been paid up on the shares. Now, whatever amount you have paid up only will be redeemed. So there were 10,000 shares of rupees 10 each. Preference shareholders have paid 10,000 shares of rupees 8 each. So that means 80,000. Can I give you back 1 lakh? No, only the amount that has been paid up will only be returned. Whether or not there is any preferential right to the payment of fixed premium specified in the memorandum or articles unless there is any agreement. If article specifies something else, then you will have to follow the same provisions. Clear? Sometimes the redemption happens on premium. So premium can also be paid. Preference shareholders may also participate in equity pool post preferential entitlements. Now, this is interesting. First point is clear. They will entitled to participate in the process of winding up. That is clear. But what is the meaning of equity pool? Now, listen very careful, children. Sometimes, after making payment to the preference shareholders and the equity shareholders are also paid up, there is still a pool of amount which is left. Now, if the articles of association allows and tells that this terms of the issue when the preference shareholders were issued, if it was clearly written in the AOA that yes, you will be allowed to participate in equity pool, then yes, you are participating preference shareholders. याद है ना आपने करे हुए types of participating, non-participating. If articles is written, participating preference shareholders, they will participate in the equity pool which is left after the preferential entitlements also. If it is non-participating, they will not participate. So if the right to participate as surplus is not mentioned in the terms, then they are non-participating. Simple. Preference shares can be cumulative, they can be non-cumulative. They are generally, if it is not written, they are assumed to be a cumulative preference shares. Accumulation of dividend can be excluded only by a clear provision in the Articles of Association. So there was a case, Staples versus Eastman, which said that if AOA is not mentioning, then you are considered to be a cumulative preference. First year, there was profit, dividend was paid. Second year, profit, dividend was paid. So your dividend gets accumulated depending upon the profits of the company. So generally, preference shareholders are cumulative preference shares. Now, this is very interesting question. Without looking at the answer, tell me, can a company have only preference share capital? क्या ऐसा हो सकता है कि कंपनी की सिर्फ preference share capital? Is it possible? With over whom are you giving them the preference? No, ma'am, it's not possible. Very good. Why? Because then over whom are you giving them the preference? You will give them the preference only when they are equity shareholders. So you can never have only preference shareholders. I hope Rajveer Ray, now your point is also clear related to equity pool. Thank you, Ms. P. I'm glad your point is clear. 4.8. Okay. Anubhav, I never said DVR requires SR. Did I say DVR requires SR? I said DVR is special business which requires explanatory statement. But in case of DVR, we always pass. You have to tell me, children. In case of DVRs, we always pass OR, ordinary resolution. Okay? Clear हो गया? Equity shares, plain vanilla, clear hai. DVRs clear hai. So this is what we have discussed from our notes. Company limited by shares, OR, no default in filing of financial statements. What are the number of years for the filing of financial statement, no default to be made? 3 or 5 years? 3 years. Very good. If the company has defaulted in payment of dividend of preference shares, then within how many years of the default rectified, the company can issue the DVRs? 5 years. Very good. See, intelligent students. Yes, Mr. Hirsch, then they will be considered non-cumulative only if the articles exclude. Otherwise, they're always assumed to be cumulative. Yes, Mr. Anubhav, it is absolutely correct. Your understanding that you've shared in the chat box, it's absolutely correct. Explanatory statement will be given because it is a special business. Okay? Company shall not be penalized. These 5 acts names you have to remember. So all these points we have discussed briefly. Entries have to be made in the register of members. Now come to a very, very interesting section, that is section 46. What is section 46 telling you? How many of you remember? All right, thank you, Anubhav. How many of you remember the chapter CA Foundation Sale of Goods Act when we were discussing about the document of title to goods? You remember there was a topic, document of title to goods is a document which talks about the ownership. It can be endorsed further. Remember the bill of lading, all those documents, doc warrants, everything. There was a line written in the next small paragraph, which we often used to tell the students that this will get more clear when you go to CA intermediate. So today that day has come when you will understand the meaning of that line, share certificate. You remember, if you can just recall, it was a paragraph which was written that if you're holding the document of share capital, where also the example of FD was given, then the person whose name is written in the share capital is said to be the owner of that document. But which was a document of title to goods? Remember, the transporter can give it to somebody else, whosoever is showing that document. It was Khushi Yadav. You can send your question again, child. There's so many questions coming in the chat box. If you still want to ask something, you can write them. All right, Khushi? All right. So, share certificate is a document which talks about prima facie evidence of title. Means if there is a share certificate on which it is written Mr. B, then what is presumed? अगर Mr. B का नाम लिखा हुआ है तो क्या मान लिया जाएगा? It will be assumed that Mr. B is the owner of this share certificate. Okay, Khushi Yadav is saying, ma'am, please explain equity pool point in Hindi. So Khushi, in Hindi equity pool का मतलब होता है जितना भी पैसा कंपनी का बच गया है. जब हमने प्रेफरेंस शेयर होल्डर्स को पैसा दे दिया, इक्विटी शेयर होल्डर्स का जो पूल बचा है, जो बैलेंस मनी बचा है, क्या प्रेफरेंस शेयर होल्डर्स उसमें पार्टिसिपेट कर सकते हैं? वो तभी कर सकते हैं अगर आर्टिकल्स में ये चीज की परमिशन दी गई. जब उनको इशू करा था, ऑन द टर्म्स ऑफ इशू मींस व्हेन दे वर इशूड दीस प्रेफरेंस शेयर्स, दैट टाइम वी हैव गिवन देम दिस परमिशन, देन यस दे कैन. All right, clear? Okay. Yes, Miss Shubhanshi, it's absolutely correct. He's the owner of that shares. Good, Harsh. Dhanush. Excellent. Yes, Shubhanshi, you get practical as well as theory. The practical questions will not be for solving questions, but the kind of examples that I'm giving you, they can give you such kind of examples, which we'll be doing in the class also, but the answers will be most likely theoretical. Okay. So it says, whosoever's name is written when the shares are issued in held, the person's name is considered to be the shareholder. A certificate specifying the shares held by any person is a prima facie evidence of the title to which the shares are issued. Now, who will sign? So it says seal and sign of the share certificate is very important. How will the signing of the share certificate happen? The share certificate are always issued under the common seal of the company. Remember, common seal. It is very important to have a common seal. So Mr. B, and there will be a stamp of ABC company. Then only it is a valid share certificate. Or it says that it can be signed by 2 directors. So even if you're signing by 2 directors, then also it's okay. So if you don't have a common seal, because now you know it is optional, it is not compulsory for a company to have a common seal. Then what will happen? If company is not having a common seal, then 2 directors should be signing. But if the company is having a company secretary also, then 1 director and 1 CS will sign. Then only the share certificate is valid. This is a very important provision. We'll be having a test of question also from this. So when does the share certificate becomes valid? If it is signed under the common seal, or it is signed by 2 directors, or 1 director and a company secretary, where the company has appointed company secretary. So if the company has not appointed a company secretary, then who will sign? Excellent. 2 directors. Good. But it says company is not required to have common seal. It is optional. So if it is signed by 2 directors or 1 director along with the company secretary, it is also valid. Clear? But if the composition of board permits that one of the 2 directors shall be in a position other than the MD or a whole-time director, So sometimes the board says that at least one of the two directors shall be a person other than the MD or whole-time director. Then that is also allowed. Say, for example, company is not having all the directors as managing directors. So one managing director, one any other director is also okay. They can also sign. A director has signed the share certificate. Now, this is very, very simple as well as interesting points which are coming up, but they're just for understanding. Okay, they're not for very too much detail that you have to go. It is simply talking about the signing of the share certificate, how the signatures have to be done. So you all know that nowadays we have digital signatures also. You can get your digital signatures electronic ways. But at times we can scan the documents or we have the photographs and we affix the signatures also. It says sometimes the directors will deem to have signed the signatures, the share certificate if it is printed on a facsimile signature by means of any machine, equipment or mechanical ways. वो कह रहे हैं कि साइनिंग का ना कोई मैकेनिकल तरीका भी हो सकता है. No, Miss Bhumika, if you're having a CS, then one director and one CS will sign. Okay? Miss Shelja, correct answer. Okay, now listen carefully. ये थोड़ा सा technical words है, but है बहुत easy. I mean, I'll explain you in both English and Hindi. It says that how the signing of share certificate has to be done. The signature can be printed by using any machine or document. So digital signatures, electronic machines, computers, internet you're using for having a digital signature. Or you can also have engraved in metals or lithography or digitally signed. Now it says you can have your signature engraved on metals. Have you seen on stone people have engraved their names? So this is another way given. It says not by means of rubber stamp. Not rubber stamp share certificate, but you can have your name engraved in metal or on stones you have affixed your signatures. All these kind of things are allowed by the Companies Act. But you are personally responsible for fixing of these signatures and the safe custody of your machine, equipment, or whatever material you are using for this signatures. So law says the share certificate that Mr. A is getting, he is the owner of the share certificate only then when it is properly sealed and signed. अब उसे signing को भी complicated बना. He said the director who is signing will fix it either engraved signatures on a metal or on a stone you have engraved your affixed your signatures. Whatever method you want to use, it is your responsibility. Your means director responsibility to keep his signature safe and put it over here on the share certificate by whatever means he's using, but it should not be a rubber stamp. So MCQ क्या बन सकता है? Can we use a rubber stamp for pasting the signatures on share certificate? No. A rubber stamp is not allowed. Clear? All right. Clear, everyone? Now, share. This was about the shares held in physical form. But अब तो physical form में तो होता ही नहीं है ना shares. They are mostly Thank you so much, Ms. Kushi Yadav, and I'm glad that all your doubts are getting cleared and never have the fear of learning law, okay? So if you keep a fear in your mind, then you will find it very difficult. So always enjoy the subject. Try to understand. Be happy when you're studying law. Always, all the children. You should always be in a happy mood whenever you open up your law. See, children, if we are happy, we'll send positive signals to our books also. If I'm worried, I'm sad, how will I do it? How will I manage? So suddenly you have seen the expressions on my face have changed and the same stress goes at the back of my mind also. But one thing which I told you on the beginning of the classes, what you have to remember, I can do it. And when you have told yourself that, yes, I can do it, no one can stop you. Trust me. But keep reminding yourself repetitively because at times things will come. It will become too huge. Learning will become too much. But keep on doing it. Just keep moving with the flow. You're done preliminary, well and done. You're done incorporation, revise it, complete. Later on, we'll open it again. Prospectus is now on your tips because I tested your knowledge in the starting of the class. You have really prepared very well. Now we are doing share capital. Keep going with the flow. Keep revising. Revision is must. If you are revising whatever the teachers have done with you in the class, you will never have any kind of phobia in learning. All right, Khushi? And everyone. Okay. Clear now? So physical form of shares, you have this kind of different kind of signatures that we are using. But yes, Jendra, Bhumika, all of you have answered. Yes, Anubhav, they have these kind of lithographies and other kind of engraved metals where they use such kind of signatures. All right. But now we have to have it as a demat forms. Okay. Yes, Priyanshi, absolutely correct. Okay. Now, what is the meaning of shares held in depository form? Shares held in depository form. So when you take up the shares in stock market, how will you buy the shares? What is the actual story behind that? So you must have heard about CDSs, NSDL, who actually help you in taking the shares in a company. Yeah. Where has it gone? So these are the depositories who actually help you in taking up the shares in a company. You don't directly go and buy the shares. The securities are in a demat form. There will be an investor. So for example, there is an investor, Mr. A, who wants to buy the shares in a company. So he will take the help of CDSL or NSDL, and they will tell them that this is the company who is doing well. You can buy their shares. So this investor, Mr. A, is known as beneficiary. What is he known as? Beneficiary. And this CDSL and NSDL are known as, you all know, depositories. जिनके पास आपके shares deposit होते हैं. In what form? Demat form. Remember rule 9(9)(a)? I gave you a briefing in the previous chapter. And then they will find out which companies you have to invest. So this is the beneficiary, Mr. A, who has taken up 10 shares in a company. So 10% of the ownership he will get. Benefits will be given to him. What are the benefits of the share? Voting rights, dividend, whatever benefits. But who is holding the shares on his behalf? The depository, CDSL or NSDL is holding the shares on his behalf. So he is owning the shares, but actually the beneficiary is the investors. This is the entire process that you have in holding the shares in demat form. Remember, listed companies always have to have it in demat form, but unlisted public companies also now required to follow rule 9 and 9(a) in order to get their shares issued in dematerialized form. It says chapter number 3, prospectus and allotment requires every unlisted public company to issue the securities in dematerialized and also get the facility for dematerialization. I told you that there is a facility, how the dematerialization happens, the SIN number is generated. You don't have to learn all that. You simply need to remember that dematerialization is important for every company. Clear? So now since the shares are in demat form, demat का मतलब होता है electronic form में हमारे सारे shares हैं. ये depository हमारी help कर. So if the name of Mr. A, one is in the register of members, your names are entered. Another is your name in demat, your names are entered in the register of deposits. So if Mr. A's name is entered in the register of depository, that means A is the beneficial owner of this company. If, say, for example, PQR, these are the shareholders whose names are recorded in the NSDL. That means that this is the prima facie evidence that PQR are the shareholders. If XYZ's names are recorded in the records of CDSL, then again it is a prima facie evidence that they are the beneficial owner of the company. Listed company always have it in demat form. Unlisted company from year 2018 onwards, 2nd October 2018 onwards, it will also have its shares. Either it will have its shares or converted shares into dematerialized form. as per Rule 9 and 9. Everyone is clear? Yes, they have their shares. Depositories are the people who are holding the shares in electronic form. Okay, clear. Now, issue of renewed or duplicate share certificate. Now, what happens if you have lost your share certificate? Now, this is something very, very interesting. Let's go to my presentation. It's a little complicated here. So prima facie evidence, these are the points, signatures, at least one or two directors shall not be managing or whole-time director if the board permits. Now, issue of renewed or duplicate share certificate, if your share certificate has been lost or you have destroyed it, then you have to give proper evidence that you are only the shareholder. Now, there was a share certificate Mr. A was having. I told you if Mr. A's name is appearing, it is a prima facie evidence of title that he is the owner. But if it is toned, if the name has been erased, water spilled over it or ink spilled over it and his name has been removed, now what will happen? He's holding shares in the company. This was the only proof. This is talking about the physical share certificate points. So where your share certificate which was originally issued has been lost, किसी ने चुरा लिया या destroy हो गया means खराब हो गया, then you can be issued duplicate share certificate only if board of directors allow. So whose permission has to be taken over here? Board of director is important over here, but you have to give a proof. How will you prove that I was Mr. A? I am only the shareholder. Also, you are the thief who have stolen this and now you want to issue. So you have to give, it has to be proved. Evidence has to be given. A lot of evidence will be provided in order to make sure that you are the real. In case the original share certificate has been defaced, mutilated or torn, अगर तो फट गया है, खराब हो गया, it has been torn, it has been spoiled, then a replacement can be. So there are two things. One is replacing, one is issuing duplicate. So this is my share certificate. Suppose this is my share certificate and it's torn from here. It's spoiled. So it's still visible and I go and tell them that this is my name which is appearing, but it has been torn from here. So please issue me a replacement. Second is it's completely destroyed. It's completely destroyed. It no longer exists. Then I will have to get a duplicate share certificate. So there are two different points. And one is replacement, but where you're asking for duplicate, there are strict provisions have to be followed. Evidence has to be provided. And in case of a replacement, you will surrender your original one and you get a new. You will have to give back your older one and you will get a new one. Now, when will it happen? It will happen if the company is doing a consolidation of shares or a subdivision. Consolidation means if the company has 100 shares at the rate rupees 10 each. Now, company has consolidated 200 shares at the rate rupees, क्या हो जाएगा? आप बताओ. अगर मैंने 100 shares rupees 10 थे, but अब मैंने 200 shares कर दिए consolidate at the rate rupees 50 each. Same capital, very good. 5. Why are you saying 5? 50. 100 shares at the rate rupees 100 each. So 200 shares at the rate rupees 50 each. Or the company has split the shares. This is splitting of shares. Or it has consolidated by saying that I am consolidating and dividing into 50 shares at the rate rupees 200 each. Any kind of changes, consolidation or subdivision if the company is doing, then yes, good. Then the company will have to issue a new share certificate. So where the company is doing a consolidation or subdivision, then company is not going to charge any fees because it is company's requirement. Then the company will be giving a new share certificate, or the company is merging with anyone else. Then the company will issue a written new share certificate. Or if the company is replacing, then it will clearly write the word replacement and fees of rupees 50 will be charged. But if the High Court or Supreme Court or central government has ordered the company that you need to split your shares, consolidate the shares, then company will not be charging any kind of fees. Now let's understand about how these duplicate share certificates are issued. In case it is a listed company, then within 45 days from the submission of the documents, the share certificate will have to be issued. But if it is an unlisted company, then 3 months time period will be given for all the completion of documents and issuing the share certificate. So first of all, the company is going to ask for a proof that why do you need a duplicate certificate? Who are you? How can you prove that you were the real owner? What time you have taken the shares? When were the securities allotted? All these question answers will be done from you. And then if you're a listed company, then within 45 days, you will be issued the share certificate. If you're an unlisted company, then 3 months time period will be. All the record of the share certificates, renewed, duplicate, whichever have been issued, will be maintained in form number SH2. So the first form of this chapter, we have done in the previous chapter 4 to 5 forms, and you have been answering, you have been learning PES 1, 2, 3 along with the chapter. So try, make an effort if possible, just keep learning the forms, because MCQs do cover such kind of questions related to forms and penalties. Penalties, I understand at times it becomes too huge, but these forms, the way we are doing the chapters, you keep on reading it, eventually you get to learn. So SH2 is the register in which you have to keep a record, because you are issuing the certificates. किसको share certificate दिया है, किसका replace कराया है, किसको renew करके दिया है, to whom we have issued a duplicate. The word duplicate is very important, which has to be issued on the duplicate share certificate, and the one which has been surrendered, there the word cancelled will be. Okay, and all this information will be in form SH2. I will show you form SH2 and SH1 today. The registers will be kept at the registered office of the company or place where the register of members is kept. So where do you keep this register? Wherever your RO is situated of the company. If it is in Delhi, you will keep this register in Delhi. Or if the register of members is kept in Bombay, you can keep it in Bombay. Under whose custody this duplicate and original share certificate has to be maintained? It has to be maintained under the custody of company secretary. So children, one thing is very clear when we are studying about corporate law. Khushi Yadav, all this consolidation and splitting is as per the choice of the company, or whenever the central government or any orders have been come from the court, then they do. Okay, you don't have to go into detail. Okay, SH means shareholder. Very good, Anubhav. So PAS was short form of prospectus and allotment of securities. And here SH is the short form that they have used for shareholders. So SH means shareholders. SH2 form is the forms related to chapter 4, that is share capital and debentures. Now, I was telling you that whenever we are doing Companies Act, so Companies Act entire management, authentication, signing is largely responsibility given to the CS of the company, that is company secretary. So under whose custody and authentication this document has to be kept? It will be kept kept under the custody of CS or any other person authorized by the board. If the company is not having a CS, then who will authorize? Board will tell in whose custody this certificate has to be kept. All right. So company may replace all the existing certificates by the new ones in case of a consolidation or subdivision. We have already done this point without requiring the old ones to be surrendered. If the company is replacing because of these reasons, then you don't need to surrender your old ones. In the new certificate, it will be mentioned that it has been replaced. Fees of ₹50 per certificate will be charged. If you are asking for a replacement, no fees will be charged if it is as per the High Court orders. Shares in depository form in DMAT, the record of the depository is the prima facie evidence. I just now told you. So if your name is entered at CDSL or NSDL, then it is considered to be the prima facie evidence that you, Mr. A, are the owner of that respective shareholder. Now, there is a huge penalty which is involved if the company tries to defraud an issue of duplicate share certificate. That's why Section 46 provisions are very harsh and important. That means if you are not Mr. A, and you claim that I am Mr. A and you have given the proof and you try to give evidence, and the company has also cheated and done a fraud by issuing a duplicate share certificate, then there is a huge penalty. Company will be liable 5 times the face value of the shares involved, or 10 times the face value of the share involved, or rupees 10 crore, whichever is higher. So can you see, up till rupees 10 crores, the penalty will go. And the officer who has issued this duplicate share certificate, look at him. He will be liable for 447 action. Remember 447, the only harsh penalty where imprisonment up to 6 months to 3 years and up till 10 years is also given if you try to defraud the investors by issuing a duplicate share certificate. So if your share certificate has been lost, you have to take the things very seriously. You're investing in a company. If you have a physical copy, maintain it. If it is in demat form, things will be different. But if you are trying to issue a defrauding duplicate share certificate, then this is the liability that the company and officers in default will have to pay. So all these rules in Rule 7 and 5 tells you that the share certificate shall be in form SH1. All the books related to the records of the share certificate will be maintained for 30 years time period. And in case of any dispute, then it will be preserved permanently. Now, first of all, share certificates will be in form SH1. So what was SH2 for? SH1 है ना शेयर सर्टिफिकेट का, तो मैंने अभी क्या बताया, SH2 किसके लिए था, जल्दी बताओ. What was SH2 form? For the renewed and duplicate share certificates. Clear, everyone? And SH1 has all the details of all the share certificates which are issued by the company. All the books related to the record of share certificates, all these records have to be maintained for 30 years. And if you have a disputed case, means if there was an issue that you have issued the duplicate certificate, but the matter went into litigation, the person was not correct or the evidence was not correct, then the book has to be maintained permanently. Disputed means लड़ाई, अगर कोई लड़ाई झगड़े का केस था तो permanently preserve करना है, otherwise 30 years के लिए you have to maintain this. Now this third point is very interesting and important. I told you the old share certificates will have to be surrendered. Surrendered का मतलब क्या होता है हिंदी में? वापस कर दोगे कंपनी को? It shall be immediately returned to the company by defaced by stamping and printing of the words cancelled will be written. So there was Mr. A. I am Mr. A. I have this share certificate is spoiled. I went to the company. I gave this one and I issued a new paper. Now the company has to write cancelled over here. Is the company going to destroy it? After 3 years, the company will tear it off, destroy it, burn it, only by passing board's resolution and in the presence of authorized person. Only then this thing can be done. Board resolution will be required to be passed and authorized person's presence is very, very important when such thing is made. So all the old share certificates will be surrendered and the word cancelled will be written, and this will be destroyed after the expiry of 3 years and in the presence of an authorized person, and board resolution can be passed. If the shares are jointly held by one person together with another person, then the delivery of share of the person to one of them will amount to be delivery to all of them. So if there are husband and wife A and B, they are together holding the shares, then even if the certificate is given to Mr. A, it will be considered as if the certificate has been given to both of them. All right. Clear? Authorized person means, Miss P, that the person whomsoever the board has authorized, जिसको board ने permission दी है कि आप जाकर देख सकते हो कि ये destroy हुआ है या नहीं. So we have discussed these points. Rupees 50, duplicate certificate. So you have to surrender your letter of allotment or fractional coupons. What is the meaning of fractional coupons? Suppose a shareholder is having 30 shares. Suppose the shareholder is having 30 shares and he is issued a bonus share of, he is having 10 shares. And he is issued a bonus share in the ratio of 3:1. So for every 1 share, he's getting 3. So if this ratio has to be calculated, 10 into 1 upon 3, so a figure of 3.33 shares will be given to him as a bonus share. Okay, children? So can we say that there is a fractional amount of 0.33? So it simply tries to tell you where such kind of fractional coupon. So for this fraction, a coupon is given for that required value. So you have to return these fractional coupons and letter of allotment also whenever your new shares are being issued. Okay, this is a simple thing it is trying to explain. So don't get confused with such kind of terminology. SH1 में क्या क्या लिखना है? बहुत इंपॉर्टेंट चीज है. नेम ऑफ द पर्सन टू whom the certificate has been issued, the shares to which it relates, and the amount which is paid up thereon. Clear? Again, section 88 register of members information has to be maintained. Let me just check out that point of 30 years was clear. It is within 45 days. So it was clear, 45 days and 3 months time period has been given. So please refer to the new study material and module. It is given 45 days. And this is your penalty, which you all have to learn. Read this question. It is observed that Golden Apple Transport Limited issued share certificate in duplicate with an intention to defraud. Total shares with respect were nearly 12 lakhs and face value of each share is rupees 10. What will be the maximum fine, children? Please calculate and tell me if the answer is correct or not. Is it correct? 12 crores? Yes. Because minimum fine is 5 times of the value and maximum is 10 times or 10 crores, whichever is higher. So the total shares with regard to it cannot go more than 10 crores. Why it is written the maximum fine that can be imposed? Higher of 10 times the face value of the shares or rupees 10 crores. Let me just get it checked. It should be 10 crores. Ma'am, can you explain the meaning of prima facie, Rihanna? Rihanna, prima facie, child, it means that whosoever name is written will be deemed to be the owner of that shares. So prima facie का मतलब होता है जो लिखा है वही दिखाई दे रहा है, वही एविडेंस. मतलब this is the main evidence, this is the main factor. So if Rihanna is written on the share certificate, it will be assumed as if Rihanna is the owner of these shares. Okay, that is the meaning of prima facie. Now let me just check out if we can do certain questions. Section 48 we have not yet done. We have done 46 and okay. So we can do this question. Let me just open up one question for all of you. Okay, share certificate. Or shall we complete sweat equity shares and then we jump to the questions? Yes, Anubhav, it should be minimum and maximum in the same way. All right. Let's proceed with the voting rights, section 47, but then we have variation in shareholders' right. But I want to do sweat equity shares is another important topic which I want to do with all of you today itself. See if we have any MCQs. Irregular allotment also, yes, I remember we have to do that also. All right, I have one MCQ for us. So read this question very carefully and tell me the answer in the chat box. Wonderful to see your answers. Almost everyone has given the correct answer. So that's great. It will be 5 years from the end of financial year in which the default is made good. So this is how you will be getting the questions and the MCQs in detail, on the basis of which you will have to write the answers. Now, children, somebody has written it is 15 days instead of 45 days. I hope your doubt is now clear that it is 45 days only in case of unrestricted. I think let's start with a very interesting topic, sweat equity shares, because I wanted to do this topic with all of you today, since it's a very... मैम एक बार हिंदी में एक्सप्लेन कर दो. शुभांशी बच्चा, क्या एक्सप्लेन करना था? द सेम क्वेश्चन जो क्वेश्चन अभी दिखाया था शुभांशी, उसमें ये लिखा है कि अगर कोई कंपनी डिफॉल्ट कर रही है, उन्होंने लोन लिया और वापस नहीं करा, सो हमने डीवीआर इशू कर सकते हैं. सो हमने अभी पढ़ा है कि अगर आप लोन रीपेमेंट, प्रेफरेंस शेयर होल्डर्स डिविडेंड की पेमेंट, इन सब में डिफॉल्ट करते हो, तो जिस साल में आप वो डिफॉल्ट ठीक करते हो, ठीक करने का मतलब होता है अब मैंने लोन रीपे कर, तो 2019 में अब डिफॉल्ट ठीक कर दिया, अब उसके 5 साल के बाद में डीवीआर इशू कर सकते. क्लियर? दोज हु वांटेड इन हिंदी. ओके. नाउ व्हाट आर स्वेट इक्विटी शेयर्स? स्वेट इक्विटी शेयर्स होते क्या? Sweat equity shares are the shares which are issued by the company at it. Acha, let me tell you, children, all these topics in share capital and debentures, they are individual topics. So don't worry if we are jumping to another one, because it's a little bigger topic. So I wanted to complete two big topics. I told you, right? DVRs and sweat equity, and others are very small, tiny topics, which we'll do in between. So sweat equity shares are the shares which are issued by the company to its employees or at a discount for consideration other than cash. So these are the sweat का मतलब क्या होता है हिंदी में? Sweat का मतलब होता है पसीना, sweat. That means you have been doing so much efforts for a company that you are sweating, in a general layman's language. that you are so hardworking employee. So company feels very happy that look, my employees, my permanent employees of the companies, they are so hardworking. They are giving me intellectual properties, innovations, know-hows, value additions. I should also give them something in return. So the company plans to issue them sweat equity shares under Section 54 of Companies Act. So these are the equity shares which are issued by the company to its directors or employees of the company at a discount or for consideration other than cash. मतलब cash की जगह वो कुछ और लेकर आते. So sweat equity shares are the only shares which can be issued at discount. Otherwise, issuing of shares at discount is not allowed. Section 53 में पढ़ेंगे. Okay? You're not allowed to issue the shares at discount. Very simple, only 2 points over there. But in sweat equity shares, you can issue the shares to the employees at a discount. For consideration other than cash means for something that you have to pay, it can be other than cash. So what are the employees paying? Employees are giving a know-how or they're giving any rights in the nature of intellectual property or value additions. These are the words which as it is, you will have to learn. So what are these rights? Yes, Anubhav, you cannot issue the shares at discount otherwise, but sweat equity shares is the only exception. You want to say where it is written? We're not having 53 over here. So So section 53 clearly tells you that you cannot issue shares at discount. There is a prohibition on the issue of shares at discount. You cannot issue the share at lower than the face value of the shares. Say, for example, you are issuing the shares of the face value of 100 and you plan to issue at a lower value of 95. So 5 rupees is the discount. This is prohibited. It is not allowed. Issue of shares in discount is not fully prohibited. It is only prohibited after 2017 amendment. The only exception is, please mark it in your books, important, page number 4.24. The only exception is sweat equity shares under section 54 can be issued. They are the only shares. Otherwise, other than this, the company cannot issue the shares at discount. Issuing of the shares at discount is void. Issuing of the shares at a discount is void. Clear? So what does section 53 tells us? That issuing of the shares at discount is void, but the only exception is, what is the only exception? In case of sweat equity shares, ma'am, we can issue the shares at discount. So what is the second point? First is the shares are issued at a discount. 100 रुपए का issue है, आपने 90 में issue कर दिया, 10 रुपए आपने क्या दे दिया? Discount. Now, what are you giving in return? You are giving a know-how or any rights for the innovations or value additions. The employee is giving these things and he is getting sweat equity shares in return. Now we have to learn the way we have done the conditions for DVRs. Similarly, section 54 subsection 1 provides certain conditions for sweat equity shares. The first condition is the sweat equity shares should be of that class which is already issued. Say, for example, there are class A equity shares. So A equity shares वालों को ही sweat equity shares issue हो सकते हैं. The shares should be of the same class which has already been issued. Here you need to pass a special resolution. I told you one is ordinary resolution, another is special resolution. In DVR, children, we pass OR or SR. In DVRs, what do we pass? Bhumika, intellectual property is any kind of right, any kind of innovation that you're providing to the company. Employees कोई नो हाउ दे रहे हैं, कोई नॉलेज दे रहे हैं, उसके बदले में उन्हें शेयर्स में.
I'm sorry to disturb you.
Yes, sir.
One student has joined with the name of Dash. Please rename yourself. Students, you have joined with the name
Students,
of Dash.
yes. Please name yourself who has joined, or else you will be removed. So I think we can remove him.
Ma'am, wait for 1 minute. I will remove you. Please continue, ma'am.
All right. Thank you, sir. All right. OR is the correct answer. For DVRs, we need to pass OR. Ma'am, so if DVR is issued, then sweat equity must also be. Don't get confused between both the shares. DVRs is differential voting rights. There we have different voting rights, different dividend. Sweat equity shares are the shares which are issued for a reason. You are doing something good for the company and company wants to reward you. Yes, Anubhav, new class के shares, sweat equity shares नहीं हो सकते. It should always be the same category of the shares which have been issued. Yes, Mrs. Deepika, absolutely correct. SR is passed in case of sweat equity shares. OR is passed in case of DVRs. Now, this SR, the special resolution, should specify the details regarding the number of shares, what is the current market price, what is the consideration, who are the directors or employees to whom these shares are to be issued. ये वाले जो sweat equity shares है, ये permanent employees and directors को issue. We are not issuing it to the outsiders. Okay? The rights, limitations, and restrictions are applicable to the equity shares are the same as applicable to the sweat equity shares. They rank pari passu with any other equity shares, means at par, on equal footing. So whatever rights has been given to class A equity shares, the same rights will be given to class A sweat equity shares. So the same kind of rights, same kind of responsibilities, restrictions, and provisions are for the sweat equity shares. Now, a special resolution needs to be passed for issuing a sweat equity shares. Now comes your rules and regulations. What are the important regulations? Number one, the sweat equity shares are issued to the employees of the company. What is the meaning of the employee? Employee should be a permanent employee who has been working in India or outside India. So there is Mr. Madan, who is an employee of ABC Limited, and he's working with our Singapore branch. And he has been serving very well to the company. He has lot of sweat, means वो हिंदी में समझाने का मतलब था, सच में नहीं है कि वो आप स्वेट निकल कर आए और आपने बोला जी मुझे स्वेट इक्विटी शेयर्स दे. रियल में थोड़ी ना होगा. स्वेट का मतलब है आपने उसने कोई इंटेलेक्चुअल प्रॉपर्टी बनाई, कोई नो हाउ बनाया, कोई नॉलेज गेन करी. अब वो कंपनी को नॉलेज देना चाहता है तो कंपनी उसे बदले में स्वेट इक्विटी शेयर्स दे सकती है कि नहीं दे सकती है. ये सिंगापुर में. कैन वी गिव हिम द स्वेट इक्विटी शेयर्स और नॉट? Yes, ma'am, we can only if he is a permanent employee of the company. CA inter students go for their articleship. Are they permanent employees of the company? Are they permanent employees of the company? No. So can we issue them the shares? No, we cannot issue them the shares. We cannot issue them the shares. Very good. Next is a director, whether a whole-time director or not. Okay. An employee or a director as defined above, either of subsidiary or holding company in India or outside India. All the students on the portal, I hope you are paying attention. Yes, all of you. Absolutely correct answer. So he should be a permanent employee or director of the company. He can be a whole-time director. Can we issue the sweat equity shares to the employees of my subsidiary company? Yes, ma'am. Can I issue the sweat equity shares to the director of my holding company? Yes, ma'am. In India, outside India, also you have to remember. Clear ho gaya? Now you all know to whom the sweat equity shares have to be given. Now let's understand what is the validity of special resolution and what is the procedure. SR needs to be passed. It should be of same category of the shares and resolution should specify all the details. Now this special resolution is valid only for a period of 1 year, not more than 12 months. So 1 year is the validity of time period, means sweat equity shares should be issued within a period of 1 year after this resolution has been passed. अब क्या हुआ होगा, कंपनी की शेयर होल्डिंग मीटिंग हुई होगी, जनरल मीटिंग, सारे शेयर होल्डर्स आए, सबने रेजोल्यूशन पास करा, 75% of shareholders agreed that yes, sweat equity shares can be given. Now this resolution has been passed. Now this resolution, if it is passed on 7th April 2025, it is valid up till 7th April 2026. Within this 1 year, sweat equity shares आपको issue कर देनी चाहिए. How much sweat equity shares can be issued? 15% of the existing paid up share capital or rupees 5 crore shares, whichever is higher. Let's assume the company's paid up share capital is rupees 10 crore. Then, my dear students, please tell me how many sweat equity shares I can issue. What is 15% of paid up equity share capital? देखना है आपने सिर्फ. Do I need to include preference share capital? The company is having 10 crores equity capital and 11 crore preference share capital. What will I check? Only 15% of 10 crore because paid up equity share capital 15%. How much does it comes out? 1.5 crore, is it correct? Or rupees 5 crore, whichever is higher. So how much can we issue, children? Yes, Priyanshi, both holding subsidiary and associate will be included. Mrs. Deepika, fully paid up equity share capital is important. 50 lakhs? Miss P, 50 lakhs kahan se aa gaya? Okay, 1.5 crore you mean to say. Okay. So 1.5 or 5 crore, whichever is higher. Somebody is writing 15 crores. Oh my God, 10 crores is your paid up share capital and you will give sweat equity more than that. Children, where is your maths? Soumya. Yes, Deepika 5 crore, Soumya 5 crore, Mrs. Anand Ruthi. 1.5 crore. Okay, it's okay. Not an issue. So 5 crore. Gunashri, absolutely correct. Ritika. So ma'am, maximum 5 crore we can issue. So everybody is on the same page. 15% of the existing paid up share capital. Do we need to consider 11 crore preference share capital also? Yes, ma'am, or no, ma'am? So no is the correct answer. So 15 crore ka, 10 crore ka 15%, 1.5 crore or rupees 5 crore, whichever is higher. So sweat equity shares of 5 crore can be issued. But there is a cap on, say, sweat equity shares cumulative, including all the previous funds, shall never exceed 25% of the paid up equity share capital. क्या कहा उसने? कह रहा है आप 15% or 5 crores, whichever is higher, you can issue. All my students calculated 5 crores, absolutely correct, well done. But what is the maximum cap? Maximum cap is 25% of 10 crores. Please tell me, children, how much does it comes out to be? Ma'am, it is 2.5 crores. So, how much sweat equity shares I can issue? इंटरेस्टिंग है ना, मुझे पता था आपको प्रैक्टिकल अच्छा लगेगा आज क्लास में. So, how many equity? 2.5 crore. Excellent. All of you, my intelligent students, have answered it so beautifully. 2.5 crores only we can issue because this is the maximum cap limit which has been fixed. एक और पॉइंट, एक पॉइंट ये समझ आ गया ना सबको. 15% और 5 crores, whichever is higher. Maximum cap is 25%. Sorry, this is the second point. So maximum will be 2.5 crore. One more point. If you are a startup company, then your sweat equity shares maximum limit will be 50% of paid up share capital. Then you can issue maximum sweat equity share will be 50% of paid up share capital. What is the meaning of paid up share capital? Please write down in your notes. Here you will include, क्या आना चाहिए? Here you will include preference share capital also. So कितना हो जाएगा? 10 plus 11, 21 crore. 21 CR का 50%. 10.5. So let's take it a little simple. 10 is your equity share, 10 is your preference share. Whole numbers में कर लेते हैं ना. So 20 crore हो गया. So how much you can issue if you're a startup company? Then you can issue 10 crores of paid up share capital. 20 crores, 50% of paid up share capital, 10 crores. You can issue sweat equity shares up till rupees 10 crores. And all those who have been answering along with me, wonderful answers. Clear? Miss Soumya, Deepika, Kushi, Pragya, equity and preference, Rajbir Ray, great, Anubhav, Miss P, Almaz, Gunashri, Priyanshi, very nice children, very nice. So sweat equity shares is now easy and interesting for all of you. फटाफट से revise कर लो. SR pass होना चाहिए, same class of shares होना चाहिए. SR will specify the categories, details, number of shares, all these things. Maximum is 15% of 5 crore, whichever is higher. Max cap 25% of the paid up equity. In the first and second, it is paid up equity shares. For the third startup, it is 50% of the paid up share capital, which includes preference shareholders also. And what is the time limit for the SR to be validity of SR is? What is the validity of SR? 3 years, 5 years, 1 year. Priyanshi, for the startups, you're not looking at the limit of 5 crores, okay? For the startups, usme alag limit. 1 year is correct answer. Rajveer is saying 3 years. Within 12 months, yes. Correct answer is not more than 12. Good. Pavan Kumar is saying 5 years. Maximum cap में थोड़ा confuse हो गया. कोई बात नहीं अनुभव. First time you have just heard about these words, so it's okay. It's normal to get confused because you're doing it for the first time. So let's have a quick recap. First limit is 15% of sweat equity or 5 crore, whichever is higher. So maximum cap means ये जो भी आएगा, it shall not be more than 25% of the paid up equity share capital. This is the second limit. It has to be read together. Okay. Yes, Ritika, all the rights of equity shares the same as all the rights are given to the equity shares. Now let's do certain points from the rules. The lock-in period will be 3 years. So what is the lock-in period means? Once you're issued sweat equity shares, you cannot withdraw these shares. You cannot sell them for the maximum period of 3 years. How the evaluation will be done? A registered valuer will be called who will determine and tell the price of these sweat equity shares. All the IPR, that is intellectual property right, know-how, value additions, will be carried by the registered valuer, and he will provide a report to the board of directors that what should be the valuation. अब मिस्टर मदान थे सिंगापुर ऑफिस में, उन्होंने कंपनी के लिए काम करा, वैल्यू एडिशन बनाया. So this, how will you compute the value? How many shares has to be issued? What is the value the company is getting? That all will be determined by the registered value. And if it is a non-cash consideration, so if you're giving any asset to the company, it will be shown in the balance sheet. But if anything other than the asset is given, then it will be shown in the profit and loss account as an expense. So examiner can ask you in the question that there was a company ABC Limited, sweat equity shares were issued to Mr. C, and he has given a land and building in return. So how will you do the treatment of this non-cash consideration? Ma'am, it's land and building. It is a depreciable asset. We all know that. It will be shown on the asset side of the balance sheet. Lock-in period means आप पैसा withdraw नहीं कर सकते. ये वाले shares आप sell नहीं कर सकते हो. प्रियांशी and खुशी यादव भी 3 साल का lock-in हो जाए. You cannot sell them. ठीक है. एंड डायरेक्टर्स रिपोर्ट में डिस्क्लोजर देना है. डीवीआर में भी हम डायरेक्टर्स रिपोर्ट में डिस्क्लोजर दे रहे थे. स्वेट इक्विटी का भी डिस्क्लोजर देना है. वहां पे हम SH2 एंड SH1 में शेयर सर्टिफिकेट्स का रजिस्टर मेंटेन करते हैं. फॉर स्वेट इक्विटी शेयर्स वी हैव अ सेपरेट रजिस्टर दैट इज SH3. A separate register is maintained for the sweat equity shares. Now, before it gets too late, let me quickly show you the SH1 and SH2 also. So let us see the format of SH1 form. So this is how form SH1 you can see with respect to section 46 of section 3 of the Companies Act and Rule 5. SH1 form is issued. Name of the company will come. SIN number is corporate identification number. That this is an incorporated company. Your registered office address will be given. This is your register folio number. जो आप section 88 में register बना रहे हो ना, उसका कौन से number पे आपका नाम लिखा हुआ है, certificate number, name of the holder, how many shares are held by you, and this is to certify the whosoever name is written will be considered to be the owner of the shareholder. Distinctive numbers have to be given. Common seal of the company. 2 directors are signing. Can you see? If it is having a company secretary, then 1 director and 1 company secretary. Now, this is the detail about when you do section 54, 55, you will understand about this transfer and transmission of shares also. Clear? Similarly, आपका SH2 होता है जिसमें आप renewal and duplicate shares are issued. All right. So let me see if we have done one MCQ. We have to do section 40 questions. Let's do section 40 questions. So any doubts, children, till here? All right, no doubts. So that's great. So we have done 2 very huge and important questions. So that is wonderful. Now, can I take your test of section 40? Are you ready for that? Remember irregular allotment of securities, how the underwriter's commission needs to be paid. Okay. So here is the question in front of you. Kapoor Builders Limited decides to pay 2.5%. I hope we have not done this one in the last class as the underwriting commission for the debentures, but the article authorized only 2%. Company decides to pay the underwriting commission in the form of flats. Please tell me if we have done this one or not. I don't think so. What will be the correct answer? Okay, Anubhav says not done, ma'am. Okay, then apply your brains and give me the correct answer. There are two important questions in this. Frame a good answer. All right, everyone has given the correct answers, and I'm so happy that you remember the provisions of prospectus also. So 2% is correct because it was 2.5 or whatever article says, whichever is lower, you cannot exceed from that. And yes, the proceeds can be issued out of the proceeds also. So yes, flats can also be given, and consideration other than cash can also be provided. The sum shall not exceed the amount which is given on the articles. Payment of commission is made. And if for shares, it is 5%. For debentures, it is 2.5%, subject to the articles rate specified in the articles. And yes, the company decided to pay as per the provision exceeding the articles, it is invalid. And the second point is company is trying to pay the flats. Both the company and the rules do not impose any restrictions on the mode of payment. Okay. You want to do another one also? Excellent, excellent. My God, so many great answers. Soumya, Anubhav, all of you. Very nice. So great answers given by all of you. So let's welcome Shraddha ma'am is also here. So good evening, ma'am.
Good evening, dear students. Good evening, CA Harleen Kaur, ma'am. How are you, ma'am?
I'm good, ma'am.
So, kids, how are your classes going on?
Great. And I'm so happy to share with you that the students are so responsive and they are understanding. And today I took a test of the previous chapter also and they all answered it so correct.
Great, great, great. So, today we started with the chapter of share capital, which is our chapter 4 of this paper 2. And generally, if you see from paper 1 to, from chapter 1 to chapter 4, we have around a weightage of around 20 marks. So by the end of this chapter, you will be thorough with 20 marks at least. So should I take a brief test of the students or should I ask some question from the students, ma'am?
Yes,
From
ma'am.
what you have taught them today?
Definitely. You can ask few MCQs to them.
Okay. So students, you need to, I have a few questions for you. Just listen to them carefully. The first question is, a company issuing DVR. So today you have learned DVRs. A company issuing DVR should not have defaulted in repayment of term loan. Where such default is made, company may issue DVR on the expiry of how many years from the end of financial year in which such default was made good. Sorry.
So children, don't answer me directly. Then only ma'am can see. You can answer it to everyone. Just select.
Just a moment. So the answer would be 3 years or 2 years or 5 years or 10 years.
Children, select in the chat box. Select. Ma'am, they're sending the answers to me actually. So you select everyone in the chat box. Then your answers will be visible to ma'am also.
So some of the students select all. So the students are generally writing, most of the students till now have written 3 years or 5 years. So students are confused between two. Some students,
Vinashri, Priyanka, Ritika, M. Mohammed, Mujahid, they all have written 5 years.
yes. So the correct answer would be 5 years. Okay. One more thing I would like to add in this question. When the institute will be asking you such questions, let's make it a bit towards the examination point of view. They will not be asking this question directly that for how many years. We will be giving you a question that a company XYZ, which has issued some DVRs, and now they have made some default. So if now the company has to make good, now the company in this financial, so and so financial year has made good the default. So now they will not give you 3 years, 2 years, 4 years, or 10 years. They will give you the answer in terms of the financial year. So now calculation part will be involved in this. If it is today, if you are standing today, then 5 years from that financial year. Okay. So this is the way any teacher that is telling you the MCQs, they will tell you in a simple language. But while the institute will be testing your knowledge, we will be giving you something extra. We will ask you to calculate. If you would have seen the previous papers, then all the MCQs are generally application and analysis basis. So let me ask one more question. XYZ public company has proposed to issue sweat equity shares. So today you have completed sweat equity shares also. So there is a question on that. Shares to 7 of its employees for the value additions that have been made by them in terms of economic benefits which proved beneficial to the company. Okay. The period for which the employees who have been allotted the sweat equity shares cannot transfer them is 1 year from the date of allotment, or 3 years from the date of allotment, 5 years from the date of allotment, or is it 6 months from the date of allotment?
So you have to tell till what time you cannot transfer them. Okay. Again, they're sending the answers to me. Ritika, P, Mujahid.
No problem, I will see. So they are sending the answers. Lock-in period is 3 years. Correct. So the lock-in period for sweat equity shares is 3 years. Okay, is there a minimum? Do you know the difference between ESOP and sweat equity shares? Any student? Are they the same? Any student? Kindly write. So you are writing, they are, let me just point it out again. Whether sweat equity shares and ESOPs, are they same? I'm expecting more answers. Okay. Give me the full form of ESOP, ESOPs, and the sweat. So sweat equity shares is obviously a full form. Sweat equity shares and ESOP. Okay. Now let me put it further. Did you read about ESOPs in section 42 also? Yes, you read about ESOPs in section 42, wherein the ESOPs they were excluded. They never, in section 42, they never said about that sweat equity shares are excluded. They only said about that ESOPs are excluded. Am I right, Harleen ma'am?
Yes, ma'am. Actually, they have not done ESOPs in detail today because
No,
ESOPs is a
I'm not
proper.
saying they have done in detail.
Yeah, but you are saying right. Yes, yes.
I'm just bringing this point to, like, if I am here, I have to add some value
Yes,
wherein
ma'am.
students
Your
get stuck.
validation is always beneficial.
So what I can say is, first of all, ESOPs are different and sweat equity are different. These are two different things. Sweat equity shares are generally given for technical know-how. Okay. And when it comes to ESOPs, as students have said, that it's employee stock option. Okay. So these are two different things. Secondly, why I am telling you this? I think one attempt back, we got a MCQ, this case scenario in exam, which was totally based on this, the difference between ESOPs. It was basically in relation to section 42.
Private placement.
Yes. So what happened was they confused the students with the terms ESOP and sweat equity shares. So that's why I'm bringing out it to you that it may seem to you that they are same. Sometimes in examinations also what happens is, like we say, keywords. So what happens is, since students many a times are not clear about the difference between the two or many such other terms, they use the terms interchangeably. According to dear students, you guys, what happens is you think I have written it correctly, but if you see technically, many a time difference is there. So this was one such instance. But otherwise, if I say, you guys have given the answer to MCQs very correctly, let me just ask one. ESOPs offer employees options to purchase shares in future, but sweat equity shares are directly issued to directors employed for their work. That's what I'm saying for the technical know-how. So let me ask just one more question. Neon Limited, a listed company, has authorized share capital of rupees 25 lakh. And this is the issued, subscribed and paid up capital of 20 lakh they have. So authorized share capital is 25 lakhs and the issued, subscribed and paid up capital is rupees 20 lakh. The company has planned to buy back share worth rupees 10 lakh. What is the maximum amount of equity shares that the company is allowed to buy back based on the total amount of equity shares? Listen to it very carefully.
Ma'am, this is buyback. I think the
So
next
you
one.
have not completed today buyback?
No, we have done sweat equity and DVRs and section 43.
Okay.
So
Sorry.
share certificate they have done. Share certificate if you want to ask.
No, I was just more interested in buyback today. I thought that you may have completed it, that also. So, okay.
Last one for the share certificate signing. Next one.
So some student has given the answer to this also. So you are saying how much? A student has given answer to with respect to this also.
So the maximum cap limit is similar, children, that we have done in sweat equity shares. So I've given you a hint.
It was an out of syllabus question. 5 crore. Okay. Yeah, 25, like right now, I think I will not go into the calculation, but 25% is the correct amount. Reason being, you have still not read the provisions for buyback. So let's without going into the calculation part, so the correct answer as of now is 25%. So ma'am, I really, oh, good. So you have done it in accounts. So very good, students. I really liked it that ma'am gave you a hint that it's similar to what?
Maximum cap of sweat equity shares.
Yes. So this is how you even link the things. Very good, Anubhav. So ma'am, that's all from my side for today.
Yeah. Thank you so much, ma'am. Your value addition specifically related to ESOPs and sweat equity was really enhancing. So I'm sure students.
And students, any other question that you would like to ask from BOS that we can answer you? I hope, ma'am, I think students are very clear. So ma'am, you may please continue with your class. I think it's already at 40.
Yes.
Yeah. So bye students and take care. See you in the next class.
Thank you, ma'am. Thank you so much. All right, students, I hope you don't have any doubts. And my humble request to all of you, please revise. We have done DVRs, we have completed sweat equity shares, and we have completed the share certificates, mutilation, when they're destroyed, section 43, everything is complete. Yes, Priyanshi, I'm going to take test of section 43 in the next class. All right, thank you so much. Thank you, Deepika, Rajveer, Soumya, Anubhav, all of you. God bless you all. All right, sir, we are done with the session. Students have no more. Yes, sir.